From Bloomberg's world headquarters in New York City, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, sentiment growing more positive amid a decline in crypto trading volumes. That's according to K33 Research. We'll catch up with Vetle Lunde in just a moment.
And regulatory uncertainties are still keeping activity relatively muted. We'll have more on that with Swan Bitcoin's Terrence later this hour.
Plus, the SEC fails to win a judge's approval for an immediate inspection of Binance US's software, fueling a 98% drop in the firm's trading volumes.
All right, all of that is ahead. But first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is it is largely an update for digital currencies. Bitcoin up 1.9% on the day. We are up about 9% over the course of the last week. And that has brought us above the $27,000 level for the first time going back to August. Ether, on the other hand, a relative underperformer today, only up by about 0.75%, trading just around that 1650 level. Litecoin, on the other hand, is one of those altcoin outperformers we are seeing today. It's trading around 67, up by about 2.8%. And Chainlink, a big outperformer, up by about 3.8% on the day, Matt.
All right, so price action up, sentiment up, volume down, and flows definitely down over the past 9 weeks, or at least 8 out of the 9 weeks. We've seen about $500 million flow out of crypto assets. This, according to Coin Shares at the end of last week. I just thought it was very interesting data. Maybe at this point, Kailey, we see a little bit of a turnaround.
And Matt, of course, we were lucky enough to catch up with Coin Shares, its chief strategy officer, Meltem Demir's, last week on this program. She talked about those growing outflows and muted activity. Take a listen.
They're starting to see less activity, whether it's in APAC, whether it's in Europe or in the States. There are dozens of ETF applications. There are obviously several big court cases. We've got a lot of noise in DC, but I don't know how much that noise will translate into action given we're going into an election year. There's just a lot of uncertainty. And right now what we're seeing is that summer of apathy has the potential to turn into our winter of discontent as we continue to see investors, traders, market makers sitting on the sidelines.
Joining us now to continue the conversation is Vetle Lunde, senior analyst at K33 Research. So, Vetle, do you agree with her that what we're seeing in this market is apathy? What do you see?
Yeah, to some extent I agree, at least within the ETF flows. But you see this sense of apathy in ETFs, but you don't see the same in derivatives, and in particularly on CME derivatives. So what we highlighted in this week's report was a substantial growth in CME's open interest when you disregard activity from ETFs and only monitor active participations, so active market participants. So while Byto and BT from ProShares has experienced outflows in recent weeks, we see that active traders on the futures instrument itself is still present and active in the market. Similarly, we also see senses of growing activity within the spot market in Bitcoin, particularly on Coinbase, whereas we see a large discrepancy between Coinbase and Binance in the last couple of weeks, where Binance has seen diminishing volume overall.
Yeah, we're going to have a lot more later on in the show about that deterioration in volume on Binance, some of the regulatory challenges that are contributing to that. But to your point about you are seeing more activity in things like derivatives, what does that activity indicate about directionally where we are going?
Yeah, this is where we are in a very interesting place in the market right now, because there is a discrepancy between the CME outlook on the market and also the unregulated offshore market outlook. So CME has seen futures premiums rise in the last few weeks, and also volumes accommodating this growth, whereas the offshore market, particularly within perps, continued to see yields far below what is normal, expressing some sort of a bearish sentiment within the offshore crypto natives. So we have this discrepancy, and in terms of informational flow, CME tends to be the leading source of Bitcoin directionally. So I think it's very promising to see this discrepancy between retail flows and CME flows. And it's a very constructive market signal onwards. So directionally, the CME activity is very promising for the market ahead.
Vetle, Gary Gensler, the chair of the SEC, recently doubled down on his concerns about market manipulation in crypto when he was talking to members of Congress. how much market manipulation can you see in global markets, in crypto markets?
I am sure market manipulation has somewhat of a relevant role in the market, in particular within certain derivatives exchanges and also within certain spot exchanges. So whereas this market manipulation is very decisive on the price direction, I'm not so sure, but it is still an issue in the crypto industry, and it is something that needs to be resolved. The SEC is being quite draconian in their methods in aiming to resolve this issue, but it's still a potent issue. And we particularly see this in smaller derivatives exchanges where you can trade very illiquid altcoin pairs. And we have these market makers who very openly manipulates markets, tries to pressure down the funding rates and get people to trade and participate. So it's still an issue.
Well, I mean, the ETF applicants have proposed surveillance agreements with Coinbase, for example. How helpful is that? And what other kind of resolution, how else could these market manipulation issues be resolved?
So the issue with market manipulation is predominantly within altcoins at the moment. The regulated market in Bitcoin has already, by the SEC, been determined to hold significant size. So the surveillance sharing agreement with Coinbase is one way to solve it, but also Grayscale, in their victory against the SEC, the jury there judged that the SEC acted arbitrarily and capriciously when denying Grayscale's application, whereas they had approved previous futures-based applications. So already the SEC has acknowledged that the Bitcoin market has a relevant regulated size, and that market manipulation is not as potent in crypto or in Bitcoin as it is in the overall crypto market. So in terms of ETF approvals and in terms of the surveillance sharing agreement, I think already the market is in a very solid state.
Yeah, so we'll see if we do indeed actually get approval of one of these ETFs, what kind of catalyst that can serve as, Vetle. But in terms of thinking about catalysts, how correlated is Bitcoin or just crypto more broadly with the macro story at the moment? Considering we have a Fed decision tomorrow, for example, there's a lot of heightened concerns around what oil prices are doing, the prospects of a recession, what that's going to mean for growth. And I just wonder if any of that ultimately matters in this market.
Yeah, it feels like the market overall is sort of clinging to a past from 2022 when correlations between Bitcoin and US equities were extremely elevated and where macro really played a huge role in Bitcoin. What we have seen throughout the year is that correlations between Bitcoin, the dollar strength index, and the US equities have fallen. So correlations are now effectively nearing zero. We are about to reach an area similar to that we were in before COVID. And this tells me, and it should tell the market, that both the upcoming FOMC and further macro developments, particularly related to interest rate hikes, should not have a similar emphasis on the impact of the market as it did before.
But it's interesting because in terms of thinking about the liquidity challenges that are still present in crypto markets, doesn't that tighter monetary policy have to factor into that as well? Does it matter not necessarily from a price perspective in terms of correlations, but in terms of what is happening with liquidity?
Yeah, essentially the bond between Bitcoin and traditional asset classes was related to both huge funds investing in both Bitcoin and traditional equities, using Bitcoin as a proxy to hedge risk. And further, it was also a result of the free money that we had during the 2020 and 2021 era, where VCs invested very wildly into the entire crypto industry. And this was the essential components leading correlations between Bitcoin and the traditional equities to be high. Liquidity concerns is obviously something that will impact the market. And throughout the year, we have seen few tendencies of liquidity entering the crypto market. It's been more flows within. So, for instance, the March rally was primarily driven by flows from within, where people rotated out of stablecoins into Bitcoin as people feared the deposits after the banking crisis. But essentially, these correlations regimes that we had in 2022 does not reflect the current status in the market. And this is due to like crypto currently floating in its own sea, as it did prior to COVID.
Vetle, great to get your take. Thanks so much for joining us. Vetle Lunde of K33 Research. Really fascinating view and interesting thoughts on the crypto market, and especially when it comes to the ETF filings with the SEC. Coming up, Swan Bitcoin's Terrence Yang is going to join us as New York cracks down on crypto coin listings and the SEC struggles to investigate Binance US.
And speaking of Binance, trading volume for Binance US is down a staggering 98% since January of 2022. We'll have more on that later.
We're also going to get the latest on Instacart coming out with a 43% jump in its trading debut. You can see right now it's trading up about 30% to $39.40. This is Bloomberg.
We saw a couple of the senators earlier say the SEC has full authority. It's clear that they don't. There have been multiple court cases that basically says that these assets are not always securities, and therefore the SEC doesn't have a role to play. But we do want to have some regulation of the crypto markets, and in order to do so, you have to have legislation in place that puts that framework there. And so I think that the work that is going on in the House right now is incredibly important. I'm hopeful and optimistic that we get an updated bill to the floor sometime this fall.
Some commentary there from Kristen Smith last week. Yesterday, the SEC failed to convince a federal judge to let officials delve into Binance US's software. Let's discuss the regulatory issues at hand with Terrence Yang, Swan Bitcoin Managing Director. Terrence, how important is this? How key is Binance? Obviously a massive global market, but is their U.S. business really that material?
Not anymore because of the SEC and threatened DOJ action against Binance. So Binance used to be a significant percentage of the U.S. market share, and now it's almost all gone. You had guests earlier, and you guys reported earlier about the big drop in trading volume. And some of that is customers being afraid, but also some of that Binance US cleaning up its act and not wanting to continue to allegedly incur infractions with their fake volume and so forth.
How much of a problem, Terrence, is this drop in trading volumes for Bitcoin and for, crypto prices in general?
Sure, big problem short term, but medium term, meaning 1 year out or longer, Bitcoin will be fine. I personally don't see a lot of value in the other cryptocurrencies. I don't think they meet a big, urgent, unmet need. And I think a lot of them, the way they're sold and offered, do violate U.S. securities laws.
Gary Gensler, I'm sure Terrence would be happy with that answer you just gave. Of course, we're waiting for answers from Gary Gensler, particularly when it comes to a spot Bitcoin ETF. Can you give us your sense right now of the timeline, even if it does get approved? How far away are we realistically from one actually being launched?
Sure. My best guess is Q2 or Q3 of next year. I know that there's a lot of market sentiment. I think I read that 75% of folks that were experts that were surveyed think that a spot Bitcoin ETF will be approved before year end. I don't think that's going to happen. Why? Because you have to think about the difference between Bitcoin futures and spot Bitcoin. And one of the key differences is with spot Bitcoin, you have to custody the Bitcoin, make sure you don't lose it or get hacked. Whereas future,
it's interesting.
It's cash settle. Yeah.
Well, but the court in the Grayscale case, Terrence, said the SEC didn't do enough of a good enough job arguing that there was a substantial difference between futures and spot. But you're saying there is one.
There is one. Custody would be one. Another one would be, hey, look, things changed. And so I agree the SEC did not do a good job, right? Ripple had excellent lawyers from Davis Polk who said, look, 99% price correlation between Bitcoin futures and spot Bitcoin. What's the difference? We don't get it. and they were right. So I think the decision to remand and send the SEC back to the drawing board, so to speak, makes sense. But there, besides custody, the other difference is if you think about when the Grayscale case was first heard by the Court of Appeals of DC, it was months before the SEC filed their lawsuits against both Binance and Coinbase, and before all these leaks about text messages by Binance executives talking about how all this is violating the law and so forth. So I think the SEC can continue to delay while they study, right, and take into account the Court of Appeals decision.
I want to ask about the new IRS rules or confirmations in terms of how Bitcoin and crypto will be treated on your taxes. How do you think that clarity, I mean, it must be helpful, right?
It is helpful, absolutely. But for Bitcoin, it's always been pretty clear that Bitcoin is a virtual currency and therefore property and not a security under the IRS. So you can do things like sell and rebuy your Bitcoin immediately, which many people did in 2022 in the bear market to lock in a tax benefit, crystallize the loss, and reduce any and all income in any and all tax years, starting with the year that they sold and rebought their Bitcoin. WASO rules just don't apply. So that would be one.
Terrence, great talking to you. You always explain things so well, and we really appreciate your time. Terrence Yang, Swan Bitcoin Managing Director. Let's get to the IPO news, because the second biggest IPO in as many weeks, and really the second IPO in as many weeks. Let's talk about Instacart with Bloomberg Technology's Caroline Hyde. It's not like there's been a ton of IPOs, right? So what's the point in ranking it? But it did go off, finally priced, and a big jump.
Yeah, 40% at one point. We're seeing a market capitalization thereabouts of about $14 billion, which is higher than their previous range that they'd originally been pricing themselves at a valuation of about $13 billion at the beginning of the year. This is a company that has had a long road to IPO. Instacart has been trying to go, but of course, the heady days where it had a $39 billion valuation back in the times of COVID, where we were all stuck at home doing our groceries via Instacart, they've dulled down. The growth had slowed, and they were trying to reorientate the business. Fujifilm really trying to tell a story of advertising, of software, not just of delivery. This is a company that has been orchestrated so well. Remember, Nick Giovanni, the CFO of this company, was head of TMT over at Goldman. They managed to place 66% or thereabouts of the overall shares being listed, with some cornerstone investors. You think of PepsiCo that was there to take them down, D1, which wants to remain a backer. And also, I mean, this was 23 times oversubscribed. We knew this was going to go off well, but Klaviyo, that's 25 times oversubscribed. They're pricing at the top end of the range. These IPOs seemingly are going as planned.
All right, and maybe reviving as well. Caroline Hyde, thank you very much. CART right now trading at just around $40 a share. But coming up, we're going to get back to crypto. More tough news for Binance as the U.S. trading platform's volume is down a whopping 98% since 2022. And on this New York Climate Week, Bloomberg's Emily Chang is speaking with Bill Gates at the Earthshot Prize Innovation Summit. You can watch the full event at LiveGo on your terminal. This is Bloomberg. This is Bloomberg Crypto. I'm Kailey Leinz in Washington with Matt Miller in New York. Well, Binance U.S. monthly trading volume has declined 98% from 2022, according to researcher CC Data, and that volume is on track to drop further in September. We've talked about it a few times on this show, but let's get more now with Bloomberg's Olga Karev, who reported on this data and is joining us. So, Olga, just give us some of the timeline, the details here. This is really a causation story, right? The regulatory hammer comes and volume evaporates.
Absolutely. So the volumes are down 98% from January of 2022. And the biggest drop in volume basically happened since March. As you'll recall, in March, the CFTC charged Binance and CZ, the CEO of Binance, who also owns Binance.us, with violations. Then in June, the SEC filed its own lawsuit, including Binance US. And so as a result of that, Binance US lost its banking relationships, became a crypto-only exchange. It's had 2 rounds of layoffs, including last week when they laid off a third of their staff and their CEO departed.
Olga, I wonder about a different issue that you've been writing about, and that is the problem Ethereum has post the merge with staking. We've already seen 20% of ETH used to stake, and some people are estimating that could grow to half or maybe all of Ether being used for staking. What problems does that cause?
Absolutely. So it's kind of interesting. Ethereum is sort of a victim of its own success because a year ago, when it went through a major software upgrade called the merge, there was a lot of uncertainty about how much of the Ether currently in circulation would be staked or used to secure the network. And of course, you need a lot of Ether to secure the network. And what we are seeing now is 20% is already staked. And at the rate things are sort of additional Ether is staked, we could see 100% of all Ether staked by the end of next year. And so now if Ethereum developers are scrambling to sort of slow down this process, and sort of they're hoping to introduce some changes in a software upgrade, another one that's coming down the pike in a few months that will hopefully slow down this rate of staking for Ether.
It's, I think, quite funny if all of Ether ends up being staked. What's the point? Olga, thanks so much for joining us. Olga Karif talking to us about a couple of the big stories that she and our crypto team have been writing. I want to quickly check on something that has nothing to do with crypto, but just happened on the stock exchange. Instacart has gone public, a huge pop at the start of trading, and now still up 33% to $39.73. Interesting. Kailey,
yeah.
I think it's cool. Okay.
Okay, I'll do it, Matt. It says your name on the prompter, but
I thought you would comment.
That's all for Bloomberg Crypto. Okay, I was letting you have your moment. We'll be back with more moments next week, Tuesday, 1 p.m. New York time, right here on Bloomberg TV. Thanks for watching. This is Bloomberg.